All right, welcome everybody to another session of the Bookmap Academy and our coaching and mentoring program. The introduction to it here, we do this every Academy meeting. If you're new, what to do, how to get involved, what do we do here, what's it about? So let me just quickly show you. It is show you. From our website, if you go to bookmap.com and then you click on the More button here, under Community, go to Bookmap Academy, and you can read about it here and you can apply here. You'll see in the session what we do. This is only a part of it, though. This is just our weekly meeting, but what you basically do is you'll create content, you will journalize it, and we'll give you feedback and coaching and mentoring on that content that you create. So you journal, you learn to journal your trades, and we're a big believer in that. Coach Jack is here, and he's a firm believer in that, and you'll hear him talk about it. Then you have to meet some thresholds, quantitative and qualitative. And I can go through that maybe another time, but I'll go through it with a few of the guys that we're going to cover today. And you meet those thresholds, you will be invited to the Bookmap Junior Academy. So when you sign up, you just apply to the Junior Academy. Once you're in the Junior Academy, you continue on with the process. If it's kind of a testing ground at that point, it's a filtering system here. That's why we have it. It's kind of you have to go through that and prove, yeah, okay, I can do this. And then we will invite you to the Bookmap Academy, and we will give you Bookmap for free. This is the payout. If you double that quota, you will also get the stops and icebergs for futures for free. So that's if you double the quota. Continue on in this same vein every month with the quantitative, qualitative thresholds that you meet. And you can also be invited to become a coach, and you can get also data for free. So we're willing to give a piece of the pie here if you're willing to journal and partake in the community. And then the last step here is to become a Bookmap Academy streamer. We already have two streamers, Doug and Tom B, who came through this process. So it's a great plan. If you're interested, go to bookmap.com/academy, and that's that. Let me go through the disclosures and a couple of news items, and then we'll jump right in. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. One piece of news: all week long we've been doing our special event. Is the Funded Trader webinar series. Tomorrow's last day. We had Brandon Trades on Monday, Austin Silver Tuesday, Robert Rother, Scott Pulsini today, and then Thor will round it out tomorrow at 10 a.m. East Coast time. So learn from these guys how to take advantage of and how you may need to trade differently through these evaluation accounts and funded trading accounts. A bit of news here. All right, so you guys have seen this one, our beta programs. If you're interested, you can email us at beta@bookmap.com. We will give you access to the new multi-account add-on. It will allow you to trade from one chart into multiple accounts. All right, so this is perfect for these funded trader evaluation accounts, etc. Also, market pulse pace of tape and pace of tape and balance indicators. We will give you free access to that. These are great. They've been very helpful, and a lot of you guys have found them very useful. We also have the Market Pulse Web, which I hope you guys are taking advantage of. I mean, this is basically free data to stock indexes and the bellwether stocks and Magnificent Seven, so that you can look at your correlations and really get something out of it, all within these widgets that are on the free Market Pulse Web. Also a new heat map widget as well. Bookmap Academy news. All right, so just a shout out here to keep pushing. You guys are doing very well, very well. Sorry, Caesar, it's a typo there. But Caesar, Sajoto, and Dune Runner, also a typo there. Sorry, Dune Runner. Continue to push. You guys are very close. All three of you are Bookmap Junior Academy already. And we're just looking for a bit more of those thresholds to be met, and you can become Bookmap Academy. John 412, we're bumping you up to Bookmap Junior Academy. Your content is excellent. It is worthy of Bookmap Academy, but we got to go through the process. And I want to cover this actually. John, do you mind if I show your spreadsheet here quickly? Maybe you can just let me know. Yeah, really great job, guys. Okay, because also Sajoto's in here. I just want to show this to you guys because, man, these guys are doing great. I mean, look at, here's Sajoto's spreadsheet. Okay, he's got the date. He's got the notes in here. The topic and the platform and his link in here. He's making his content pretty frequently here, and is great. So this is what we're looking for. Now, let's see, John's here. Here's his as well, and every day, he's got one or two at least. And this is my question to John would be like, I know you're going through the process and you're doing a great job here with the content, the qualitative and quantitative. This is exactly what we're looking for. But I'm imagining, and my question to you would be like, are you doing this because you would probably do something like this anyway? Right? And if so, why not do it here and get Bookmap for free? And be part of the community. Okay, absolutely, you're doing it anyway. Perfect. So guys, just keep your tab open of your spreadsheet, document your trades, put it into the Bookmap Academy room, copy the link and put it in here. Copying the link and putting it in here will take you about a minute, and that's it, and you're good. You're up and running, and the benefits are great. So anyway, I wanted to just let you guys know, keep pushing, and way to go, guys. Also, November Blue Jacket competition here. The winner will receive 3 months of Global Plus. This is normal. 3 months of Global Plus with stocks or futures data. 1 month of Discord Nitro, which is a little bonus here. Another big bonus here. One-on-one coaching, 1 hour session with Tom B. Okay, so if you guys are interested, you can use your phone, take the screenshot here, and there's only a handful of days left. Plus there's, it's a short month and we have holidays. So anyway, we've been covering it. I hope you guys take advantage of it and get involved. All right, so let's go over and maybe we'll start, I think, with you, Jack. Is this yours? You have Valifan up? Is that right?
Yep.
Okay.
Yep, Valfan.
Okay. Valifan. It's Valifan because it's Valentino Rossi, the MotoGP champion.
I'll leave it to you. So anyway, this is one of his entries here. Now, on this particular day, this was I want to say early October, if I remember right. It was overall a pretty good entry. I remember talking to him about it. The issue is in the journaling here, and like Bruce mentioned, I'm going to harp on some journaling here. All we got really for this entry was just these 4 images. The first one here with Bookmap, and then the 3 below it, with only a short bit of context. I had a hard time figuring out where you were in Bookmap and trying to relate it to the charts. Too much time. And if you're reviewing your own journals or going back and kind of iterating through your process, you're not going to spend that kind of time on it, right? So definitely have your key levels or have some other reference points in there and then mark, like, make a narrative is essentially what I said in his notes here. I really want to see, like, I want to see you paint me a picture in an image or two images, tell me what's going on, where we're at, where your key levels are. Not just take four screenshots and then put them in there. And I think that this was just one of those days where things were just kind of out of control and crazy, and because this is not normally like some of the journal entries you would have put in. Um, but this one kind of like it threw me. Like it was really tough to kind of like judge where this is, simply because the entry you posted from Bookmap, right? I had to go back through our own DMs in order to figure out like which one it was. And it was a great entry. It was a really good entry. Short. We can take a look at it in the higher time frame chart, Bruce, if you want. I believe it's entry two, um, the third one. Yeah, one more down. Yeah, that one right there. Yeah, so he's looking at consolidation pattern after a top and then getting short onto a reversal. And it's a really great entry. I really like the entry. He gets a little bit of a squeeze up in there, and that's what we saw on Bookmap, right? That squeeze and then the rejection lower. I don't know where his stop was here in this particular case, and I didn't see it. But that's those are the things that I saw kind of looking at this. And looking in the audience, I don't see him there. So I'll have to double check with him when I talk to him later. But that's kind of what I saw. What do you see, Bruce?
Yeah, love your comments. I totally agree. So, uh, yeah, I know he's been busy. He's over at the
Yeah, Airball Traders.
Bear Bull Traders room, and he's, a moderator over there, presenting Bookmap. It's great. It's great that we have him. And
Yeah, this was last month's trade. This is October, early October.
mm,
I went back to look at some other trades because somebody, I think he was covered the other day on some of the newer stuff. So I don't want to rehash the same stuff.
yeah,
So
yeah,
this is from October.
okay. But yeah, I mean, I agree. Like, I mean, first off, we know what he's doing because we've gone through him many times over. But I totally agree, Jack, on the journaling here. It is, it's pretty thin, and there's all sorts of things that it's good that you bring this up, and I don't mean to give Valley Fan a hard time here, but look what we have. High liquidity, nice move up. Look at the book underneath. High liquidity here, and it bounces and it trades and it's trying to trade through it,
Yeah,
and just can't get it, can't do it. We get one more big push. That makes total sense, order flow
yeah. I
wise.
mean, yeah, it reminds me a lot of a spring pattern, right? Just in reverse, just upside down. You get that kind of like push down, that false breakout, and then it just kind of dumps lower. Yeah,
Yeah,
from that
yeah.
updraft we marked.
And then this is your kind of, I don't know exactly where his cam pivot level is, but um, someplace in this zone for sure. But I mean, this is where order flow wise is the pivot, very
It's
very
really
clearly.
easy to use the Bookmap Cloud Notes, though. It takes literally just the amount of like typing the numbers into six or seven cells on a sheet, and then just sharing that file into your Bookmap, and then there you go, right? Like it's your Cloud Notes are right there. You can see your pivots on both Bookmap chart and then your normal traditional higher time frame charts. So it really is easy to see those. Also, use the drawing tools, right? I mean, why are we not using the drawing tools here? And I know he has done it before, so I think this is just one of those ones where it was a bit thin. But these are the days when you're going to come back and you're going to be really interested in this day and have no idea what you did. because you didn't write it down, right? So
Yeah.
that's kind of what I was thinking.
Yeah.
Stan, what were you thinking here, buddy?
I think you cover everything. Yeah, I don't have much to add actually.
And this is just kind of different from Veilfan, right? Like usually his content is like very, very, very good. So um, yeah, you're definitely going to get both sides of the stick around here. You get the carrot and you get the cane. So, but
Yeah.
no, I'm going to mention it to him in DMs too. I think that this was just one of the days where he was just like, distracted. Also, he might have honestly, like he might have just copy and pasted the wrong image, because like his image that he sent me was more detailed. So could just be one of those things.
Yeah. Yeah. Okay. All right. Well, let's move on. And
Cool. Cool, cool, cool.
see.
Next, I had Caesar, the other guy we mentioned earlier today. So this is really good. So Caesar's using a modified VWAP strategy. Now, there's a couple of things about this that I don't particularly like. When he entered long, and he entered long below VWAP. Traditionally, if you're gonna use a VWAP strategy, you want to be long above VWAP and short below VWAP, right? Like that's just kind of how it was. And then in addition to that, his stop ended up being in the giant pool of red liquidity right in there, from what I'm understanding from his notes, which meant that his stop was very much a potential target, and it wasn't below over there near one, right? So he got taken out on a stop trying to go long, and it just rejected into the liquidity, um, which is a big reason why you use the liquidity as a buffer, right? That's one thing that Stan's going to probably talk about in just a second. Use the liquidity to your advantage, right? And he's trying to go long, which kind of is more of a reversion trade than an actual VWAP strategy. Um, so I think that there's a little bit of a strategy issue here. Once he got his trend direction oriented right there at 3, um, he was able to really take a good chunk out of the market. He had a great reason for getting out with the nice psychological level, really great liquidity there. Also, good reason to potentially get out. Price ends up coming back there shortly after it broke through anyway, so another great reason. Like you probably would have got trailed out at that level anyhow. So really great things there. My favorite thing about this setup, though, is that he got it wrong, took a step back, reassessed his bias, and then reoriented himself and got in the right direction, right? And a lot of people they'll panic, they'll get frustrated. Maybe they'll try and hit the long again because it didn't work the first time. Surely it's going to work this time. There's a lot of different reasons for those kinds of things, but I think one of the biggest things you can show growth and maturity wise is the ability to kind of step back and assess, hey, I could be wrong today. And if I am wrong, what does it look like? And then using that to your advantage to make a potential trade. And I think you did a great job with that.
Yeah. I don't see Caesar in here, which is a pity.
No, none of my 3 guys are here. That's okay though.
Because they're
I talk to them a lot anyway, so it's okay. I will pester them and ask them. But like I said, I really like the actual trade that he did succeed in. I think that it was a great trade. He gets a strong break off of VWAP right there, and it gets a break of the previous channel, and that's kind of where he's looking to get short. And I really like that short. Um, but I just kind of want to talk to him about, hey, why are we going long into VWAP when we're below it, right? Like generally we would be short VWAP there. And I want to make sure that we're kind of like orienting the right way or looking at the strategy the right way. And he might have strategies where he wants to revert back into VWAP, but I want to make sure that in those cases, like we're annotating that, right? So we can review it.
yeah. Yeah.
Yeah, what do you think of his stop placement right there in between price and the giant red liquidity at 6,006?
I can understand. I can understand. I found like the entry a bit aggressive. I mean like Actually, I also cover that one.
Yeah,
And yeah, I find like yeah for the long, I would maybe wait a little bit more conviction from buyer and waiting what happened with this liquidity. I don't
yeah,
know about his setup, uh, he posted in other.
yeah. You'd want to see something with this liquidity, though, right?
Yeah, exactly. And then so he took a shot and got out at VWAP and finally getting again at VWAP when sellers came in, when
Yeah,
he thought like he was already more high probable
yeah,
to go lower, and then he got like the scale for the full profit like front of the liquidity.
yeah. He got the full
Makes
profit
sense.
down there at the bottom. Yep.
Makes sense. So I was wondering like how many trades he is willing to take, and he is using like a time range within like how many trades he will take within, for example, 30 minutes, or because in this case it seems like he took two
That
stops.
was 3 trades in like 10 minutes.
And yeah, exactly. And so I was yeah a bit wondering if there were a bit of over trading in this case, but if it was part of his plan, it was okay. But even for the second entry in the short one, uh, I don't really see the seller's conviction.
Yeah, the second entry is my biggest issue with the overall setup. It's the short entry that I like the most, right? Once he
Yeah,
gets that break
yeah,
and he finds the conviction and he starts to lean in, I like that entry there. But yeah, the second entry where he's trying to go short, I don't like that right off the start though. But yeah, it's one of those things where again, I think like there's a strategy issue here, and it could be part of, like you said, over trading maybe a little bit, where he's being a little too aggressive, wanting to hit the green or the red button a little too much. Um, because if he does just take a step back and he goes, "Hey, we're below VWAP right now. Am I sure I want to be long?" Even that brief hesitation right there, I think is good, right? Like I think in this case would be very, very good because you don't necessarily take that long, and then you look at a short and you're like, okay, well, where would a short set up? And it would probably set up somewhere around VWAP or around there, and that's exactly where it does set up. So
yeah,
yeah, it's
true. And maybe have a sort of checklist to explain
yeah.
the key elements. For example, for your long, uh, um, yeah, or even like what was the plan and
Yeah, I've scalped longs that are very similar to his setup at 950 to 957, somewhere in that range, 952, 957. I've definitely scalped a couple of like ticks here and there, right? But it's very aggressive. I know that I'm kind of off sides of where the trend is. I'm more playing an imbalance. And so like you say, like if that's part of your strategy, then that's kind of okay. But like let's be clear, like what was it you were trying to do here? And I agree with you. I think that it does seem a bit aggressive. But I do like I said, the ability to go, hey, I made a mistake on the direction. Let's get the direction right and then go the way we want to go. And it just grinds right against VWAP all the way into 6,000 if I remember right this day.
yeah, true. And yeah, but finally he got a move, so yeah, that's good.
Yeah.
I was just wondering like how many trades he can be willing
Yeah,
to
I don't
take.
know.
Yeah.
I'll add that to his note though from you so he can let us know.
Yeah.
That's all I got for these two. And I also have Christoph, who's also not here, Bruce, if you want to look at
Okay.
him.
Okay.
He has some really good charts.
Yeah, he does. He does. No, I have a few comments here.
Go ahead. Go ahead.
Still for Caesar. Um, I think Stan, for me at least, you nailed it. I mean, everyone knows we've been like pounding on the table about a checklist, and I think that it, because I think what you guys had nailed it. Like, well, how many trades was how many shots is he going to take here? Uh, and so there. I think the big issue here is, well, first off, do you how do you know when? I mean, what is your greatest trade, for this VWAP. Like your best setup, your cleanest, your clearest. And I think the checklist will help you. So then you won't take maybe some of these other trades, and you'll look for a better trade. I think that would be really helpful because, clearly in hindsight, this is super easy. But heck, I mean, I know we're in a downtrend. I mean, because you can see the VWAPs here in your lines and stuff. But this is a lot of liquidity, and it all trades and it bounces. We don't come back down, and we see volume starting to come back in again. I could see easily, a reason and a trend line in here for just as long as you get some buying coming back in, for taking this long. But this is where it starts to fail, and here's your retest of that failure, and then some exhaustion, and then here it looks perfect to me. I mean, it's harder, but this is really, I mean, it's telling you. I mean, in my mind, in hindsight, of course, it's telling us the buyers are done. The sellers are going to be in control here, and the target would be down here. But if it's off of VWAP, then wait. Like you were saying, Stan, I don't see the conviction in here either, for the sellers yet. I do see potentially for buyers in here, but like they just couldn't muster the power any longer. Anyway, just I think the checklist and then kind of understanding this context a little bit cleaner or clearer will help you not take some of these other trades, in my opinion. Okay, so you want to go on to Christoph?
Yeah. So Christoph here, he has amazing resolution. Honestly, it's great to see somebody have a monitor bigger than 13 inches using Bookmap, because you can really see the way he draws his trend lines. He's got some really great visuals there. And also, this is still pretty wide. Like, this is still 5-minute time intervals that we're seeing price move here. So he's got all of this, and this is NQ. So like we're moving, or this is not NQ.
Yeah.
Is this one NQ?
Yeah, it is.
Yeah, it is. Okay. There was another one I was looking at too. So I mean, we could see quite a lot of real estate here, and you can really see quite a lot of order flow and kind of how it works. Now, one critique that I didn't put in my chart here is I do think that you would benefit from Trader Map Pro, because I think you get a lot like the visual that I get, which you don't have that bracketing liquidity around. And it really does make NQ much better. Like it's so much nicer to view NQ that way because you can really see where some of the standout levels are. Whether or not you want to target those is up to you. But this is a really great visual. One of the limitations that we have here, and I know you're kind of new because I haven't really come across you yet, is that I don't really have a checklist. I don't really have an idea of what you're doing. I don't have any idea of a strategy. All I can infer based on the image is you're short and the market is dumping right into your lap and you're happy about it, which is great. Love the trade from that concept, but why are we short? That's the kind of context that you want in your journal entry, and you at least want it in some sort of text form. So definitely have it, whether or not you put it in the Discord message body itself, or if you put it into the actual image, whichever way you prefer, it doesn't really matter, but I would definitely organize it so that you can have it there, because I have no idea what you're doing there. In addition to that, the couple of things that I think would be the best is, why are you taking profit at these locations? Are these set values, or are you running some sort of strategy where you're looking for this specific risk, or are you looking for order flow events? And if you are, what are you looking for there? And show me that. Zoom in on that a little bit. Because this, while you have a lot of great information here, I don't see any of the detail that you're using to make those decisions, right? Why are you short? Why are you trailing out with profit? So those are my biggest critiques overall, but I really like the layout that you've got here. You've got a lot of really great screen real estate. So definitely continue in that direction. Also, these call out, these flags are really, really good. I really, really like those a lot. That's it for most of the stuff I had for him. It was a great first entry from seeing him.
Stan.
You got anything, Bruce? Oh, there you go. Stan?
Uh, yeah, that's a great trait. I don't know if we can go into the other images from this trait where we can maybe have
I
more
think I put
description.
one more. Yeah, there was one more in there.
Yeah,
That was all
exactly.
there was there.
Yeah, yeah,
With all the different
exactly. More, yeah, with
drawings. Oh, these are
video
so
and
good.
yeah, exactly. And so the explanation about the thread, and I think it's great to have multiple charts
Yeah.
to have a
I
better
think this with
context.
Trader Map Pro would have been a beautiful chart.
Yeah, true. Yeah, true. That's
I
something.
think that's the only thing this chart is missing,
Yeah,
honestly.
but the confluences are great. And again, I find maybe a bit aggressive the entry when we go again on the other picture. Um, like
Yeah.
it seems he was buying when buyers were there.
Yeah, it's kind of hard to
About
see.
yeah, yeah. He was like shotting. Yeah, taking like 5 shots when buyers were there. I I would obviously wait for sellers to break maybe the level with conviction to
I like the
go.
where he took his TP1 just after that is probably where I
Yeah,
would have liked to have personally gotten short.
yeah,
And that kind of goes like I
exactly.
don't understand his strategy, and that's just because one, I haven't really had a chance to really interact with him and stuff as a coach, and then two, he didn't write it down, right? So between both of those, it's really tough. So
Yeah, and I like the money management. I was just wondering. At one time, he decided to lower and then to
raise it
higher.
back up.
Yeah, exactly.
Yeah,
And so I was wondering why he did that at that time. Um, and still he
yeah.
was
It
not.
was it was right. It was right around TP3 and TP4. TP4. It looks like he was going towards VPOC. He was willing to take VPOC as help or whatever his moving trend is that's
Yeah,
trailing down.
that's yeah, mid I think. And and just at the end, yeah, I understand why he took the stop after all the scale bias gaming.
Oh yeah, for
I
sure.
was yeah wondering like why he decided to put the stop at the VPOC and not above the structure as he was doing before. And like it seems every time the sellers were pushing down, he was lowering his stops. And in this case, like he yeah
This one, it looks like he got hit with liquidity. Like I zoomed in on this one, and based on the way the triangle printed, I don't know if you might be able to catch this. Catch where his exit is, Bruce. If you can zoom in there,
Right
it
here.
looks yeah, right there. If you could zoom in on that, it looks like his stop is actually like just above the structure, but it does look a little tight. You see what I'm saying there, Stan?
yeah
Like it's
exactly
at
but
the structure
yeah yeah
area.
yeah yeah but then like sellers came in and he put it at the VPOC and
Yeah.
so I was just wondering if it was a good
Why is he moving around so
placement.
much?
Yeah, exactly.
Yeah.
At that time, but yeah,
Yeah.
that's
Look at that bias.
yeah, true. But still, yeah, I think it's he's still like a bit new with Bookmap, and that's great that he's annotating. I just
Yeah.
find
This is great stuff.
in this case like maybe more order flow highlighting, like as you mentioned now, the liquidity with the Map Pro, or even the read, but that's great. Then he was using like a market structure with those canal
Yeah.
to in confluence with point of interest and order flow to take
Yeah. I
advantage
really
of
want
it.
to see
So that's great.
why he's getting in, right? Like
Yeah,
just a little bit more of the why, right? Because like you and I both agree, like it does feel a little aggressive for his entry there. So yeah, I totally agree with you on that.
but maybe it was just like the one he was waiting for, VWAP plus mid. Then he decided to enter and
Yeah.
ends with something else. And yeah, maybe it's why, because it's the beginning, he's just like annotating things and trying to, yeah, to
And
have
he could have
something
been
to
super
look for.
zoomed in, right? Like we don't know.
Yeah, true.
So
That's true too.
like he could have been super zoomed in and seeing something in some of the market microstructure and like, hey, I want to be stored here. And yeah, I do want to be aggressive. But that's one of the things about your journal, right? Like you want to have those kinds of pieces of information, whether it's again in the text or in the image, because when you come back to it, that context kind of matters. So
Yeah, true. And then it will help to build a checklist after.
it will indeed. Bruce, did you have anything here on this one
Yeah,
other than
yeah.
it being a very great chart?
I mean, I totally agree. I mean, Christoph has been really making some beautiful charts. But like you were saying earlier, Jack, and you, Stan, as well. I mean, you know, I'm not really getting too much out of it. I mean, as well, I mean, is beautifully annotated, but like,
Yeah,
where's the order flow? Well, where's Trader
yeah,
Map Pro will certainly help. Um, but like, you know, and a checklist, like, why did you get in? What were
yeah,
you looking at? Why did you get out? What were you looking at? And you know, start to mark these things up. That will make your trading strategy,
yeah.
and everything will become very, very clear, a lot clearer. But I mean, my lord, you know, he nailed it and did a great job and everything. But like, take profits. Like, I want to see like I got out because of this. This all
Yeah, the
of this.
reasons.
Yeah, exactly.
Yeah. What are the interactions? I remember when I first started learning, one of the individuals who was helping me learn, it was options at the time, goes, the best trade you will ever make is the one you can do again, the one you can replicate. And it's always held true to me, and it still holds true. And when I look at these kinds of trades, they're great trades, but why did you get in, and can you duplicate it? Because that's the goal, right? That's the end game. If you can continuously do this consistently, that's what you're here for. And I make a lot of great trades over the day, but it requires a lot of journaling, a lot of like keeping track of what I'm doing, why I'm getting in, why I'm getting out, and what I'm looking for. There's a lot of context there. And sometimes it's directly order flow related, and sometimes I'm looking at, different types of market structures. Maybe I'm looking at, the dollar instead. So there's different reasons. But when you're journaling a specific trade, make sure the context for that trade is all available so that nothing else is ever needed other than what you've got for that trade. And we just don't have that here. So there's just a lot of question marks. So it's a really great image, but a lot of question marks around it.
What was that? I'm writing it down now, Jack. What was that? The best trade is the one you can replicate.
Yeah, the best trade you'll ever make is the one you can do again, the one you can replicate. Her name was Nancy. She was a fantastic lady, incredibly smart.
All right, I'm putting it in, guys. There it is. Um, so that's a good one. That's a keeper. Um, no, really, really good. And this is part of the academy. You know, these kind of discussions, like because okay, yeah, he nailed this one, and we've seen him nail a bunch of them, but like,
Yeah,
why? I mean, like, we want to know more. And I
yeah,
think him communicating more to us will help him as well.
yeah. It's when I was an undergrad years and years ago. I had just finished calculus 1 and 2, and I thought I knew calculus 1 and 2. And my instructor goes, "Why don't you TA the next honors calculus class. You've just done it. It's all in your head. Surely it'll be easy. And I was like, surely it'll be easy. And the hardest thing I think I had done in a long time was teach a bunch of college kids calculus 1 and 2 as a TA, because when you're teaching something, it's a different level of understanding it. And that's one of the best parts about journaling is you're essentially teaching people who don't see anything else, and they might only understand your strategy to a little bit, but in that teaching you internalize your process a bit, you really nail down your fundamentals, and you might even have discussions, and in those discussions you might find better ways to execute your own strategy, right? So that's one of the best parts about being part of a community and having these kinds of things and having these conversations where we're critiquing, literally just your journal entry on a trade you succeeded in, right? Like that's kind of the great thing about these things.
Yeah. Yeah. No, really, really great. Really good discussion.
But as David would say, dead horse, we have beaten it thoroughly.
Yeah. Yeah. Stan, you're up next. Hold on a minute though. Like, just to segue nicely into that, I want to do, because we were just talking about, journaling, and there's some other traders that reached out to me, and there's some kind of maybe confusion of what we're asking for or looking for here in the Bookmap Academy. So I just wanted to kind of just take a moment here, and I'm gonna show again, like John's here, like his journal here, but then his trades, and here we can open it up in the browser, but and I mean, he's very, very cleanly and clearly annotated this with a number that matches over here in his checklist. This is what he's looking for. And here, talking about liquidity, short at key level, liquidity at 229.80. Okay, that's part of his checklist, is part of his setup. That's why he's going short. So, like, annotating these kinds of things in here, and it doesn't have to be much, but it has to be kind of clear. It's very clear to him, and it's rather clear to us too. I mean, he's not going like, it's red, it's high liquidity, and look at it, it's been in there for a long time. Maybe early on it's good to do that, but then as you continue on, this is enough. And just high level liquidity at this price level. I know what I'm doing. I know what I'm looking for. And stop is up above, and he's getting in short. So I think this is where not only will you get something more out of Bookmap, because other programs, platforms don't show liquidity like this, and you can kind of integrate that in, and I think it'll be helpful. But it will make your trading strategy so much more helpful too. This is, I think, really a really good example. Now, I'm upholding John's because I just came across it, today. We've looked at it a few times, but you guys are a lot of you are already doing this. Vinny, Laura, DNT, Crash, CMJ, Alan, Shark, Steven, all of you guys are doing this. It's great. Continue on. And just hone it and get better at it. Like we had gone through here this image from Slowdown of just, this was his process, how he started off kind of annotating all over the place, and then but then starting to understand it and hone it, refine it, and then now he's looking at cleaner things that are more helpful, that he understands. He's starting to understand the context in here, and then he had honed that into a very, very clean and clear, repeatable pattern and strategy. He's even got his diagram up here, as you guys know, and then what he's looking for, and he's got his targets, and etc. So what I wanted to get across here was, not only we've gone over this image many times in the past, but it's just not being able to annotate, hone and then move it into your process and your trade there's another element to it, and that is being able to articulate it, I think in a checklist, but these elements in here into your strategy: the liquidity, the volume, the price structure, other things like John's looking at options levels. You might be looking at fib levels. You might be looking at volume profile. Crash is looking at market pulse. I think we got some market pulse in here from John as well. Anyway, that's I don't know. That's what we're looking for. And I don't know if you, Stan or Jack, you guys have any comments on that?
No, you're totally right.
I was muted. No, that's basically most of the things that I'm looking for too, is the same kinds of concepts.
Yeah.
Yeah.
Okay. All right. So let's see. Stan, you are up
So,
next.
yeah, but I cover exactly the same as Jack.
Right.
I made like Christoph and Caesar. So I just did like maybe one more picture for Caesar.
Okay.
Um, but
Well, if
yeah,
Caesar comes in, maybe we'll go over it.
yeah, all right, perfect. But
But
if you have some and
well, we can go over Moby's, and then yeah, I've got a few guys to go through as well. Let's see. So Moby, yeah, let's jump in, and Shark, will invite you up to the stage here. Oh, John's up to the stage. Okay, did I get Shark as well? Okay, Shark's up in the stage too. Okay, great. Shark, open the mic. So Moby covered you. I don't know if there's anything. Maybe better if you walk us through, and we can of course give you the link here for the content from Moby.
Let me get this up on my screen. So last time we had a big echo coming from my mic. I figured out what the problem was, so that should be solved.
Okay. Yeah, no, you're good.
The 26th, September 26th. I'm gonna see if I could find my tick chart for this, Bruce, real quick. $9.26. Here we go. Oh, this was interesting because I put in, let me see my orders here. Yes, I plugged in. I was intending to, let me see here. This is a while back.
Looks like you shorted here. Oh, we are getting a echo.
Are you still getting an echo?
Yeah, that's okay. Just when you're finished talking, then just let us know, and then maybe you
Okay,
can
I thought I
turn
solved
off
that
your.
problem. I thought I solved that problem. I'm gonna have to do a little troubleshooting. So I plugged in 2 orders, intending to take this trade. What am I doing here? 10% stuff and that 2 people. Yeah, I was bracketing price with a long order above and a short order below. And I was originally intending to take this trade short, I believe, no long, and the what I had plugged in as my stop triggered, and then this became a short trade. Does that make sense?
So I'm sorry, say it again. So you were intending long, and then what made you go short?
Yeah. So I don't know if you have the tick chart available. I have it in front of me. I had charted out my supply zone at 58.06 and my demand zone at 57.84, and the 123 Trader VIX setup that I always use in between my supply and my opposing supply and demand zones was setting up. So I bracketed price with a buy order above and a short order below. And what was originally intended to be my entry became my stop. And it actually worked out very well.
Okay.
So you see what was intended to be my stop, that's in the green circle there, became my entry short. Price kind of based above and below that entry level for got half an hour. I mean, I typically wouldn't just sit and watch something for that long, but I did, obviously. And then price broke low that trend line pivot low and headed straight to demand. So in this case, if you go back to the other chart, Bruce, price broke low that initial demand zone and then headed straight through to the other one where I should have trailed my stop down there and took profit. But instead, I let it retrace back up to demand at 57.84. And that's where I pulled my stop down and covered the trade.
Right. Right. Okay.
I
Okay.
mean, what is that? Let me see. 86, 80. That's about 6 points. I mean, that would have been nice to keep.
So the entry criteria was just based on a bracketed order, basically.
Yeah, I mean, my entry criteria starts with my opposing supply and demand zones. Occasionally, it's not what I chart as supply and demand. Maybe it's the 1 minute opening range, or the open, or I'll use something else as a key level occasionally, but typically I have opposing supply and demand zones, and then I'm looking for my 1, 2, 3 reversal pattern to trigger at one of those zones, right? So if price is going from demand to supply, I'm looking for the 1, 2, 3 to trigger at supply, or vice versa. In this case, I was looking for a trigger uh, near demand and back up into supply. Obviously, all of my entry criteria was not in place because price was not at demand. One of my execution flaws is I tend to rush into my entry. That's something that Bookmap really helps with. If I didn't have Bookmap and I was just looking at a candlestick chart with opposing supply and demand zones and my 1, 2, 3 reversal pattern, which I did for a long time before discovering Bookmap, um, you know, uh, quite often get in not just too early, but way too early.
Yeah.
As of late, I'm leaning into the subchart indicators, the CVD and volume profile imbalance, along with the price change, and I'm really tightening up my entry.
Okay. Um, so um, yeah, I'm a little kind of confused by the entry method. Uh, the and your 1, 2, 3 pattern in here. And I know this is an older image, so I know that you have to go kind of scrambling for it. I'm kind of curious why Moby selected this one from your spreadsheet. But anyway, yeah, well, I mean, we can go through his notes, but like in the end, like yeah, it was a good trade. Well, you know, it went against you a bit here, and you kind of got in at the bottom here, right into that liquidity after it transacted, and it just kind of it went sideways for a while, and you know, you're in this for a bit, and then it just, as you can see, like even this buying and these little clusters of buying in here, they just didn't go anywhere, and now you're starting to see more selling, less buying, lower highs. It's looking pretty good for pressing down into the high liquidity here, just like you're mentioning. And
That green line above, Bruce, is anchored to the trend line pivot high.
okay, okay,
And you see where that acts as resistance. And it more often than not, in a long trade, it tends to act as resistance. In a short trade, it acts as support. It's bizarre how on point that thing is, and tends to track with that minor rally higher, that minor sell-off low that I use from the 1-2-3 reversal pattern. 9 out of 10 times they are riding the same level.
hey, I mean, that's something to really look into. Then, you know, I mean, I don't know. I'm no expert with the anchored VWAP. It's kind of a hit and miss. I mean, like, you know, Robert Rother and others like are really good at Alois and others. But what I have seen is when you do get it, it holds pretty nicely for at least 2 or 3 tries and or tests. And once you got it, you can kind of hold on to it. It's like, yeah, you know, this is working, and you nailed it here with that one.
It works incredibly well with that 1-2-3 reversal.
Yeah, yeah, that's a maybe a really good confluence to add in for 1, 2, 3.
In Brian Shammon's book, he calls it a pinch, an anchored VWAP pinch.
Hmm.
And more often than not, it really does play true.
Yeah, and you can see, I mean, like you know, I mean, I'm kind of curious to, I mean, maybe a question more for Robert, but you know, it trades down to the high liquidity here, and really sells off hard into that. But that's it. Now, you know, when you know and I love your stop, um, because you know, you're thinking the same thing. Well, I'm going to give it a shot here. If this is the high here, you know, and there's not enough buyers to take it any higher here, I am out.
Can you
I mean,
scroll into the subchart, Bruce?
I am in. If we do get buyers back up, I'm out. So yeah, we can scroll to that. Yeah.
So right there where price rolls over at 79, you see where the CVD hits that extreme in that pink square. The VPI was there as well, and I had I don't know what happened. I held that. I didn't take that screenshot till after the bell, and when I did, my CVD was just a green flat line at 0. But in real time, CVD was active and it was down into that extreme. So that same CVD VPI signal that I'm always after for entries and exits was there. It's just not in that screenshot. But that's a really good, I mean, you see my red and black box. That's a really good, just get the hell out of the trade signal.
All right, all right. You got some nice confluences, and yeah, kudos to Crash on this one. He's been talking about this for a while.
Oh yeah, Crash taught me that 100%. I
Yeah,
owe him that one.
yeah, yeah. No, good stuff. And you got high volume. You got a lot of nice things there. And but you know what else? You also gave it a chance though too, which is I really like your kind of patience with the stop. So anyway, guys, coaches, anyone else? Jack, Stan.
Yeah, I found just for the entry, I would say like uh, I would prefer to enter with the sellers than with a stop, but still, you have your plan, you apply it as usual, you have good money management, um, you trust your trade. Uh, that's great. You know how to get advantage of Bookmap. I will maybe say I don't know if you're using TraderMap Lite or TraderMap Pro for the liquidity to maybe have some better read. Um, but yeah, as usual, just good job.
So as of the last week and a half, Stan, you'll see in my current and upcoming charts, I have split my order flow onto two screens. Um, I, as we all know, I mean, there's so much data on one screen, things can get a little convoluted. So I've just split it up into two screens. I have plenty of screen space. So one of them is Trader Map Lite and Footprint. And my execution screen, I removed the passive heat map and I've kept the aggressive heat map. And that's the screen I'm executing on. It has my subchart, my volume profile, and my notes. And I've been doing this for, I don't know, a week and a half. And I'm finding it so much better. I've taken the subchart and taken up half the screen with it because I rely on those three indicators extremely for entry and exit. So it's so much better to see that subchart as half the screen than squished into that little spot on the bottom. And then I have all my liquidity on the footprint chart. So incoming screenshots, there's going to be two Bookmap screens, and the order flow read is going to be kind of split up. And I'm really liking it better that way. My question is there any benefit to using TraderMap Pro instead of TraderMap Lite?
Um, yeah, I mean, both both are pretty good. I mean, the big difference between the two is TraderMap Lite has just three settings. You know, the kind of standard, and then kind of high, filter, and then low filter, and that's it. Whereas the TraderMap Pro has a slider in there, so you can get more nuanced with it. And this is where it's kind of a weird thing, to be honest. It depends on the day, depends on the bot, depends on the size of the bot, and reference to other orders of size as well for that time period or day. So it's not so precise in that regard, to say. But I mean, you can filter more with TraderMap Pro, that's for sure. So
I think in the current time frame, TraderMap Lite is working great. So I'll probably just stick with it. And maybe at some point I'll try out TraderMap Pro. I
yeah,
do notice once you zoom in and you take out some of the larger orders, the smaller orders turn into that bright red lava liquidity that I really like.
yeah, yeah. I would suggest open them both, and then maybe even in replay mode, and then take a look, and use the um, what is it, the sync tool, chart sync tool, and then kind of do a little bit of testing and see what you like, because once you kind of choose which one, then obviously you're just going to stick with that one most likely. So whatever floats your boat, really.
Okay, will do. Now I've read these text boxes in the lower corner, and now I remember this trade a lot more. Like I'd been trying not to. I was stopping myself out of trades too soon, so I tried to lean off of that during this trade, and then I mentioned right there that I feel like it bit me in the ass, but I still think that was a pretty good exit.
Yeah, I really like it, Shark. Like you gave it a shot because we don't know. Um, and in the end, you know this much, and that's where you took your profit. And then look what it did after. You know, that makes you feel pretty good in hindsight. I bet, but maybe it spiked up above, comes back down, you get more sellers, and it continues. You never
It's
know.
it's, it's just another case where price just goes all the way from that supply zone down to the demand zone and all the way back up to the supply zone.
That's right. That's right. And this also, like, you get a feel for the environment. Like we're kind of in that environment right now. I mean, we're getting big swings on these stock indexes. And then it swings another way and it goes, several points, and then it swings another way. And, so, um, in this case here, like if you have smaller accounts or your risk management is pretty tight or whatever the case may be, you may need to kind of, not you in I'm just talking in general, is consider that you might scale down a little bit and widen out the stops a little bit, and when you get in that environment, because these swings can be pretty big.
Yeah, it's pretty wild.
Yeah. I mean, this in a kind of a blink, goes up just about 10 points. And down about 10 points. So doesn't take much. Here's your little consolidation area, which kind of grinds for a while, but then one swing and then another swing, and it can be maddening if you don't manage it well. Anyway, I guess Jack
Thank you for the
is.
insight, guys. I really appreciate it.
Oh yeah, sure. I think another thing, Shark, maybe we might have mentioned it last time though. Um, Maybe it's in your notes or something, like in the text, but try and put in that checklist of what you're looking for, and once you have your checklist, then it might help you, again, filter the trades. I know you know what you're looking for, and then look for the best setup that you can, and does it fit that criteria? And we've got the tool here. Like for example, here in Bookmap, we've we put together this tool. You don't have to use it, but at least understand. I think it's very helpful for understanding at least the concept here of the setups checklist right here. And once you start to understand, get your checklist together. DNT's done some real nice work here. In fact, let's invite him up, and grade them. Okay, do I have this? Yes. What is the condition of it? And then you're going to have a score down here. And if it's an 8 or better, that may justify your trade. If it's a 7, maybe you trade less size, whatever the case may be. But I mean, this is how you can really, I think, optimize and hone your trading strategy, and also as you get better at that through the checklist, then you're going to also manage it's going to help your trade management, not just the identification of the setup.
I'll definitely give that checklist another go. I do like the fact that you can grade each input. I did add to my checklist based on your recommendation a week or two ago, it was literally 1, 2, point one supply and demand, 2, the 1, 2, 3 reversal, and 3 order flow support. So I did add some subcategories to the order flow part of it, but
Okay.
I have it in my text because I cannot seem to find a room for it on my chart.
Yeah, yeah, yeah. Well, that's okay. I mean, like, try to maybe in a separate image, or in the text, that in the description or whatever. But
It may
uh,
work out good now because I now have a third image from the Trader Map light screen, so maybe I'll just start sticking it on there. I'll give it a try for sure.
Okay. Okay. Yeah. I just think we keep on pounding on the table about that one, and really looking for that. And I just think it's going to be helpful for everybody. So let's move on, and let's see. Moby also has Sejoto, and he also has a Dune Runner, and they're not in here. So I want to kind of move on. I think might be
I
better.
just I just had a question for Stark.
Yeah. Sure. DNT.
So I like your market pulse thing because I was messing around with mine and I couldn't really get it to work for me. So I might end up using yours, Shark, and crashes your guys'
Yeah, I
market
mean,
pulse.
the
So
more I use it, the higher up it moves in my small list of confluences. Like I said, I literally just took my execution screen and turned half of it into the subchart. You'll see it on yesterday's post and today's post. Like I mean, it's fantastic. It really is. Even getting one of those things, whether it's the CVD signal I learned from Vinny or the VPI CVD thing I learned from Crash or the price change that I learned from Donkey, you get two of those and it's even stronger. And if you get all three of them, well, it's definitely smash the bid.
so I see on your most recent one, for instance, or it's all of them, right? So one market pulse price change divergence. Okay, so you get the market pulse price change that's diverging and price is still going up, and then your market pulse price change is diverging down, right?
Yeah,
Or
so that says to
or
me that I'm going to see some incoming exhaustion, and at that reversal, it may be 3 points or it may
is
be
the
30
is the
points.
divergence with price like
Divergence with
the
price, yes. So that's why I draw that square that reaches up into the chart and catches the price bubbles.
okay, and and then the VPI and CVD extreme spikes, those
That's
are
that's
those, and
just in the
they
subchart.
print higher highs as well, or or print higher highs, like you say, VPI and CVD extreme spikes print higher highs. Is that with price? They printing
No,
price higher?
I'm only looking at the CVD line and the VPI line, and when they both go into that extreme and print higher highs together, price rolls over short. And when they print lower lows into that extreme together, price rolls over long. And I'm not exaggerating. Price rolls over 100% of the time, but quite often it's only a couple ticks or a couple points. Other times it's a full reversal on the day. You just don't know without adding in other confluences.
So is it VPI and CVD are printing higher highs as in price, or are they themselves are getting higher and higher
No,
like
they
CVD?
they themselves in the subchart.
Okay.
Well, let's
I
let.
have some good examples to post, so I'll tag you on them.
Okay.
Okay, cool.
Well, we'll invite the master himself, Crash, up to the stage if he wants to go over that in more detail. And Crash, thank you. I saw you updated your sheet, so we'll go over a piece or two of your content. Maybe that's a good segue right now. And in the meantime, guys, here's Valentino Rossi. Uh, I don't know, he's like a 7-time world champion, MotoGP champion or something. Anyway, Vale Fan
Jeez.
raced. He raced. Road raced motorcycles. So, uh, I used to race motocross, so we had a little bit of back and forth there. And Crash, that's how he got his name, was from motocross or dirt bike riding. So that's a pretty, I mean, horrible accident, but a pretty funny story, Crash.
Yeah, funny in hindsight.
Yeah, yeah. So, but didn't stop your career, that's for sure.
No, but it had the potential to. Sometimes you're again lucky. Rather be lucky than good.
Yeah, yeah.
No, that's some amazing speed to see him do that, hugging those corners that low to the ground. I mean, that's unbelievable.
Oh, yeah. I mean, these guys are, and this is an old image. I mean, like I think he's retired now. But uh, you should. And he's the kookiest guy too. Like he's years ago he'd color his hair. He multiple times. Every time his helmet painting would be different. Just a wild guy, and everyone loved him. But he was also very very precise writer. Yeah, funny guys. Now, what I mean to say is, see, like he's got his elbow here. Some of these guys are now have their shoulder. I'm not kidding you. Like, I don't follow it that closely, but they're dragging their shoulder around some of the corners now. They're that far over. It's amazing. I got to mention it just because it's a phenomena.
Oh yeah, that's crazy, cool and scary at the same time.
Yeah, exactly. So let's see, Crash. I've got you up here. What is it? Tight. Yeah, here we go. Okay. So unfortunately, I kind of lost. I can just zoom in and out like this. So here's one, and this was just from last day or two, Crash, I believe.
Yeah, it sure is. This is a continuation chart from the larger picture that was on the same day.
Uh-huh.
So I don't know if you want to flip back and forth between the two of them, but if you
Is
want to
it
talk
this?
about
Is it this
pulse,
one?
yeah,
Okay.
exactly.
Okay.
So that low there at 720-ish, where you see bounce at prior multi-day low, that zone right there with the market pulse VPI spike. Yep. Look at the time frame then on the chart that you just had, and it's just a zoomed in. If I remember right, it's just a zoomed. Yep, just a zoomed in picture. So I have a couple different time frames that I end up watching the Bookmap on. So I have one NQ chart, one ES chart that are the larger time frame, like a 5 to 15 minute. I kind of go back and forth, and then I have the either Bookmap Trader Map Pro or Lite to show the liquidity zones a little bit better, and I usually have that on a 1 minute, and I just kind of compare the two together. But what I like to do is when I show the macro picture of the one that you just flipped to a second ago versus this one, it just kind of helps solidify what I'm looking at, because I do look at dual time zones, not time zones,
Time frames.
looking for. And in this one, for market pulse VPI versus the other one, you can see. And I want to clarify, with market pulse VPI, I'm always trying to fine tune exactly how I do my trades to become better and better. And you've kind of mentioned it a little bit since the pro webinar that I did. I will either do one of two things with market pulse VPI. I will either do what I call price discovery sample, if you want to call it, when I have multiple points of confluence on the market pulse VPI spike. I will do that if the market is a little bit slow and usually ticking less than 15, sometimes 18, depending on the market, but points per minute. I'm always analyzing the average true range on a 1 minute time frame. So if I am over 18 points per minute, I am not really doing price discovery at the market pulse VPI. I will only do the VPI spike market price discovery there if I'm going a little bit slower, because I don't want it to flush through me, right? If it's over that 18 points per minute, then I want to do what I have labeled before, learn to earn on the turn. So I want to see it bounce at a couple points of confluence. And here you have a market pulse VPI spike. You're coming down the yellow brick road of liquidity until price really hits the middle and kind of has a bounce there where you see liquidity. So you have 4 levels of liquidity on the left-hand side, and you got 2 or 3 on the right-hand side, and you can see the one that's right there in the middle at 720s, right in the middle of the yellow brick road. And it also happened to be a double bottom with 3 days prior. This was the low. So you have a double bottoming out process right at this particular price point. You have the middle band of a liquidity zone. You have a market pulse VPI spike. So in this case, I might do a little price discovery right there. But if I remember correctly, this was down at the bottom of like a 277 point drop. So I actually waited, not on the market pulse VPI spike. If you go to the other picture prior to this, you will see that I think I had the entry. There you go, right there. So I had the bounce at the prior low of 20,476. Was on that liquidity band, the middle of it that you saw there. We had the market pulse VPI spike. And then you see my checklist above, right? I always look for sell sweeps into sell stops. I want to see market pulse VPI code joined with CVD. After that, I want to see sell volume turn into buy volume. And in this particular case, as we bounce up, right, we bounce off the liquidity zone, and you can see that liquidity zone there that's got the yellow square down there, or the yellow rectangle, right? Price bounces above and comes back and tests the top of that little zone where that iceberg pops out. And when that iceberg popped out on that retest right there is where I entered in here. So you're basically getting a bounce, a minor pullback, and then a bounce up again with a iceberg developing. And as you all know, that's one of my favorite trades to do at market rotations, is to see those icebergs pop out for confirmation of either getting in or adding to the trade. So here's just again, market pulse VPI, wait for it to bounce, slight pullback, and then the iceberg comes out, and then I start adding. And then when I get a big liquidity push that you can see there, the or volume push, I'll add to my position sometimes, and you see that big ball of volume right there that you just highlighted. So that's just kind of explaining this trade from a market pulse VPI area. I did not take the exact bottom with price discovery just because it was smoking pretty fast. If I remember, this was like over 40 points a minute in its fastest phase. So when you're cooking that fast, you don't want to do price discovery at the bottom. You want to learn to earn on the turn. So you got to have some other points of confluence after you see that market pulse VPI spike to get in.
Yeah.
So again, trade specific, parameter specific. Got to look at the VIX. You got to look at the 1 minute ATR.
Yeah.
That made sense.
What I really like what you just had mentioned, because we were talking a little bit earlier about the environment that you're in, and you said like, especially NASDAQ, it's cooking, it's moving. So no way, like you don't know how much more supply is in there, how much more is going to drop. So you wait for that turn.
Exactly. You have to, or you're going to get slaughtered.
Yeah.
You're just going to get slaughtered. So you have to have multiple points of confluence. And honestly, the absolute safest place to enter into a trade is when you get a little impulse move up, and then you get a retrace and then a continuation of the move. That is really the safest place where you're going to get the most profit and be the safest. You know, depending on what kind of indicators you have, I am a believer in indicators. I know not everybody is, but I have some indicators that help me spot, you know, the bottom. I've told multiple times in here that I use something called Bill Williams fractals, so anybody can use those. It's a free indicator. If you're on a 1 minute chart and you see that bounce off the market pulse VPI spike, you see it bounce back down with a retest but a lower high. Now you got a right-sided pivot rule, right? A bounce lower but with a higher low. Then you get an iceberg coming out at the same time. That's a lot of confluence to say you're learning to earn on the turn, right? So enter in once you see that. Don't enter in on the market pulse VPI spike at this particular point in time.
Yeah.
Because you don't know if you're going to break that bottom.
Yeah.
You know, this is a double bottom, but what if they do want to break it? Just like you said, you don't want to get smoked. So let it bounce. With that market pulse VPI, you will get a spike when the CVD is co-joined with a spike. You're going to get something. Maybe it's only a couple points, maybe it's 20 points. But in this case, this turned out to be, you know, a several 100-point move up. So it was 277 points down from the open, basically where it rotated. And you can see up there at the top left. Here's another thing for you guys to watch. If you see that price is at a couple multi-day highs up there on the left, and you're breaking down at the market opening range below the Globex low. All right. So here the Globex low was at 20,733. In the mornings, if you've already been up pretty good, you break below that Globex low, you can look at things like ticks, you can look at ADD as some market internals to help you decide that. And that's what that graph is right there. That is trying to show that sub black chart right there. Yeah, if you go all the way over, I think, or zoom in, I think it says tick. It might be kind of hard to read here, but that's actually a tick chart. And you can see that the tick started off sub-zero right off the bat at the open. And when it starts off sub-zero and you start smoking down 40 points a minute, what you want to do is you want to let it go until you see a low tick. So that little white bubble down there at the bottom of the tick range is showing you the market pulls at VPI spike that is also on the chart to the right. So now you have confluence between a double bottom, a tick chart, market pulls VPI. Now you let it bounce and you get a retest, then you enter into the long.
Yeah, and where is it? Hold on. Yeah, here we go. But also, you know, we mentioned this. I think I mentioned this to you, Crash, a month or two ago. Like, you know, earlier, like maybe a year ago or so, or you know, when you first joined and you were looking at many indicators and confluences of these indicators, then you really started to get into this here, because it's not just the indicators. I mean, look at all of these buyers here, here, and here, right? Also down here, and we just kind of get down to it, and then look at the buyers starting to turn around. They're bidding up, like you even mentioned or shown here. You know, this is starting to understand the footprint of the behavior of the larger players. They're filled. So you know, how much more supply is there? We don't know, but you know, you're starting to look for that turn.
Exactly.
Yeah.
And
Yeah.
I mean, it's a nice market pulse VPI spike, right? I mean, it's beautiful.
Yeah.
And you do get one over to the left, but you know, that's the other thing to think about is that, okay, so you get two market pulse VPI spike. Well, how do you know which one is the right one? Well, in my opinion, you look at two different time frames. So look at this time frame. This is on a 30-minute chart. So I like to use a 15 or a 30-minute chart because you can really clearly see the dip in the CVD right there. All right, a little spike down with that market pulse VPI. But you also need to know where other price levels are in the chart, right? You need to know where the previous open, high, low close is. You need to know on a multi-day time frame, where was the last major low. So coming into this, I had already had on my chart, a lot of people have it over on Bookmap. They have the high value nodes and all kinds of points of controls and price points. But for me, I had already had this identified on my chart that this was the multi-day low from a couple days ago. So when I saw that first thick liquidity band, if you go up a little higher or look at the other chart, you're like, well, why don't you take that market pulse VPI spike? So switch to the other chart, for example, Bruce. Next one over, yeah. How do you know we don't take that one right there at 718, for example? Right, you got a nice big thick liquidity zone, and you have a market pulse VPI right there, correct? So the question is, how do you know which market pulse VPI spike to take? Because that's a market pulse VPI spike co-join with liquidity.
Yep.
Well, the reason is because number one, you are clipping down at some very fast speed. Number two, you do see the lower band of liquidity still there. And if you are cooking at 40 points a minute, anything over 20, 25, really, and you see another band of liquidity down there on the NQ, you better think that it might want to go and get it. Then you have on top of that identified a multi-day market low. Then you might want to wait to see if you're going to double bottom off of that or you're going to go shooting through it. So this is where it takes kind of like the confluence of information to know where that reversal might actually occur. Market pulse VPI spike just happens to be one of them in this particular trade example.
Yeah. Yeah. Yeah, I was going to ask that because if you look back at your chart, I'm really glad you brought it up. How do you know? I mean, like, maybe someone joins in here, they're new to Bookmap, and they're like, oh, okay, well, all I have to do is look at, look at here is beautiful, right? But what about here? What about, maybe some of these other places, like you said, like, here, there's a bunch, I mean, here, in here. So how do you know and how do you determine?
Yeah, exactly. And that's where confluence comes in, right?
Yeah.
I mean, the one down there at 830 is actually a beautiful one, that whole low area, because you actually get CVD lower there than you do on the left.
Yeah.
But here's the whole thing about confluence and divergence, right? You actually have a lower price at 720 there. You have a higher price at 830, but you have a lower CVD. Right. So this is an example of having to have a few other tricks up your sleeve. For example, I had a time frame within my Navdar time cycle where I knew that probably between 720 and 740 in this particular day, we were going to get a bounce according to the algorithms that I follow. From there, that's why I labeled that as an AM low. That was actually within my window of opportunity of where I would see the first AM low. Then if you see that and you bounce up, now you got to start asking yourself the question, well, all right, look at this. This is an ABC up. If somebody was to draw a Fibonacci right there also from that low at 720, where do you think that low at 830 would be? I can tell you right now, it's going to be somewhere between the 50% and the 61.8% retrace from the low at 720. So when you establish a low like that and you get that major of a bounce, what did it do? It mean reverted up to VWAP, which is the white line up there, right? That's at the 8 o'clock time frame.
Yeah.
So you bounce up, you mean revert to VWAP. At some point in time, you're going to have another pullback. In this case, you have a pullback for a continuation of the ABC move up. And what do you get at the bottom of the B wave? You get another market pulse VPI spike, which is a higher low than the low of the AM. So now you're using technical analysis to tell yourself, I'm using Fibonacci levels. I'm using another liquidity zone. I'm using another market pulse VPI. And now I'm learning how to use the divergence between market pulse VPI and price. So market pulse CVD is going down, but price is going up. So it's like any other kind of divergence type indicator that you might use. So in this case, this is a market pulse VPI price divergence.
Yeah. Yeah. Yeah, there you go. I mean, multiple confluences again, and mixing those in with the putting that together within your checklist that you have here, your reversal ID, and crash. I mean, just you look at your checklist in here. You've got your things, but I'm imagining you're just kind of like as a mental reminder here is the way you're using it. Okay, do I have these things? This is what I'm looking for. Where, because you got some time in here to kind of look for some of these things. I don't just maybe to hear from you, how do you use it and how does it help you?
Okay, so Jack was talking earlier, right? I commented on, you commented on it. His statement was what you typed in there, right? The best kind of trade is the one where you can have it repeatable. And I said the same thing. It's that you have to have daily repeatable trade setups. And that's what this is for me. This is a repeatable trade setup. Listen, this looks complicated, but if you're doing them every single day with the same type of setups, you don't actually have to draw a box of check marks on the screen and check them off one at a time. You should know this and have this committed to, we've said it before, right? You need to have at least 3 to 5 trades that you need to have memorized so that you can act, upon instinct as opposed to having to pull out your checklist. Because if you pull out the checklist, honestly, when you're clipping it 20 points per minute on the NQ, you're really not going to be able to get in the trade very good because it's going to be happening too fast for you. So your eyes have to be able to see, what does it look like when it's a sell sweep and a sell stops? Well, look, man, I got 1700 and then I got 1100 sell stop dots, right? You can see those on the chart. So that triggers your mind. And look at the left. You have 1704 on that liquidity zone on the left-hand side. You got 1100 down at the bottom, and then you have 463 on the right-hand side. So you're going bigger to slightly smaller to slightly smaller, right? So you can see just from the sell sweeps and the sell stops that is slowing down. So you got to understand what that looks like. You got to understand what it looks like when volume starts coming in. I have the left shoulder, high sell volume. I have the right shoulder, high buy volume. I got the high buy volume associated with lower sell sweeps occurring. So all of this checklist stuff has to be committed to memory so that you can end up acting on it. And so you'll see a lot of my trades repeating the same thing over and over and over again because it has become a checklist for me. I write it down for you guys to see and understand, but that stuff, my eyes just see it, right? I see it with my eyes, my brain processes it, my hand clicks the buy or sell window. And so I think you need to have whatever checklist it is committed to memory. Whatever 2 or 3 pieces of confluence that you want to have technical analysis wise, make sure you know what it is. Is it an ATR? Is it a Fibonacci level? Is it a Gann line? There's a lot of different things that you can use to your disposal. And if you just figure out 2 or 3 of them to add to confluence and you add that to Bookmap order flow, the trades become very clear, in my opinion.
Yeah. Yeah. I mean, that's really great to hear. I mean, like about, becoming rather intimate or, it's been memorized, but you know what it is and you're scanning, you're checking. I mean, understanding, okay, does it have this? Does it have that? What's going on here? Just like you went through with the stops. Look at all these stops. Look at a huge stop run again, but less. They're becoming exhausted out. Here, another stop run here, but quite a bit less. Now you got in the back of your mind to learn to earn on the turn type of thing. You got this down here with your CVD and your VPI. You got the whole number. You've got your back of your mind. You already know that high liquidity is getting filled on the way down, and that you have your ATR and your 77 or what was it 2070 733. I keep on going back to that one. No, beforehand here, like shoot, where is it here?
Yeah, the 20,733 was the Globex low.
Yeah, yeah, here you go. Yeah. So, and you were looking for these things. So you already know these things, but now you're really, and that's in the back of your mind. Now you're looking at these things, and then you're ready to pull the trigger.
Exactly. Now, I mean, just to be fair, to both sides, I'm not waiting 277 points to find a reversal, right? I mean, I have an opening range trade, and one of my opening range trades is if I drop it right away at the market open below the Globex low, I'm most likely going to go short. If I'm kicking off with sub-zero ticks, like I showed, it's kind of like just a little tip and tricks of what I do. So I tried to show this time. I'm looking at ticks. I'm looking at ADD and some other market internals. You get a breakdown, you're cruising it, right off the bat, 40 ticks a minute. You're going to have some follow through with this. So it's going to come and follow that yellow brick road down of liquidity as you're skirting through. There's another thing. I just listen to, I don't like try to promote other people, and I don't listen to them all the time, but what's the young lady's name? Tori Trades. I just listened to a little blurt from her. She has her own little trading social YouTube channel, but she interviewed the guy, trader, recently trader, I don't remember his name, not Jake. I have to think about it for a second, but he has a $1.8 million payout from Apex. And one of the questions she asked him was like, what are your favorite trades? Because obviously he's doing something right? If he's making 1.8 million payout from Apex. And so he mentioned that his favorite trade is the market open to 7 o'clock, 7:30 time frame reversal pattern. So in the first hour, there's two windows everybody can kind of try to pay attention to. The time between market open, 6:30 and 7 o'clock, and then 7 o'clock to 7:30. All right. Usually you go in one direction for the first 10, 15, 20 minutes. That's what I call the spill. That's what I've explained to other people before. And then after that spill is done, or after the AM low is done, if it's a full AM low turn, you're going to have some kind of reversal. So if your own mind, just a couple of these time frames that you can expect to see on a daily basis, you can start to put other pieces of the puzzle together, like the market pulse CVD low. If I already have an idea where I think that the market might start reversing, then my eye is going to be much quicker to gauge where is that market pulse VPI/CVD combination on the chart. So I start looking for that in the time zones that I'm familiar with already for a reaction spot. So again, you can add market timing to some of your technical analysis if you start studying this just a little bit more.
Yeah, great stuff. And Crash, I mean, I just, there's something like this, something I want to mention here. We've gone over your setups and your trading methods, several times, but this is what works for you. And this is like, maybe it's just, the way your mind works as well, about scanning, putting together many different pieces, and then, all these different confluences. For others, this might not work. If it does fit your mindset, then great. Maybe this is, you can learn a lot here. If it doesn't, then, and you're looking for something that is simpler, like big figure, stop run, and then buyers starting to come in, whatever it might be, just something that maybe just two or three things. And Crash has got a whole system for and multiple setups as well. He's got a lot of things to kind of juggle or put together, and he's made it work for him. That's really important though, like that it works for you. And I don't know. I just think it's worth mentioning. I keep on repeating this again and again to everybody, but like, find, learn from these ideas, but then go back in the chart and put it together. Did you see that in the chart? Does it work for you? Can you understand it? Can you digest it? And then now you can put that into your quiver. And put it into a setup checklist or something, and then go back and look at another one and another one and another one, and now you're making it your own. Now you're understanding it, and now you're building that out into a strategy.
Yeah, exactly.
So I mean, this took you
And
probably a while.
I know it sounds complicated because I've got so much on this chart. You don't have to have it all. It's just, as you get more experienced and more accustomed to your own trades, it slows down for you, right? I mean, this obviously is a lot of information, and you don't have to have this much stuff. Pick 2 or 3 or 4 pieces of Confluence technical analysis, learn to use them together, and then build your trades off of that. When I try to show charts now within Bookmap Academy, I try to show stuff that maybe not everybody is doing, because I'm always trying to introduce just different tidbits of information, tips and tricks that I use that maybe somebody can glom one piece. Maybe it's the tick chart in this example. Maybe it's seeing the sell sweeps and sell stops. Maybe it's understanding how price moves alongside a liquidity zone. Maybe it's Fibonacci's, right? So I know it seems like a lot. You don't have to have it be that complicated. Again, I'm trying to show stuff that's unique to me, and maybe stuff that's not just general run of the mill for everybody else. Because how many posts do we see within the Bookmap Academy room every single day, right? Dozens and dozens and dozens now. It's way more than it was a year ago when I first joined. And so I just, again, I'm not trying to make it overcomplicated. I'm just trying to show some new stuff, some different stuff.
Yeah. No, I don't mean to say that it's not over complex or anything. It's just what works for you. And now you've been trading a long time, and you've been looking at a lot of different things, and you've put this into like several cohesive setups and strategies that you're looking for, and it works for you. It's just like for other people that I see it or hear it. I'm doing what Crash did, and it's like okay, but I don't know if they have maybe the same kind of character or personality, or maybe it doesn't fit them. Maybe something else fits better for them. So just kind of know yourself a little bit about, like, does it resonate with you, type of thing. I mean, geez, like, Crash, you give us like a lot of like things to take a look at and consider here. So really, really great stuff.
Yep, no problem. I see some comments in there. I want to comment on one thing. So a lot of people are talking about a 2-point stop. So first of all, yeah, Shark Blue it is. It's Trader Kane, and it's Tanya Trades, not Tori. So I'm sorry I butchered her name. Again, I don't really follow her. I just happened to see this clip the other day. But it is Trader Kane, and he did take 1.8 million. It's kind of it's a 10-minute video. It's worth listening to, in my opinion. So that was the first thing I want to point out. The second thing is, what is your stop? Right? Okay, so it really does depend on what you're trading. If you want to trade the ES, A lot of times you can have a tighter stop, right? Because it doesn't move near as fast on a 1 minute ATR as the NQ does. However, I like the NQ because it does move like that. So when I can identify one of those learn to earn on the turn type spots, I can be in, you know, 20, 30, 40 points where the ES moves 10. I usually use a 3 or a 4-to-1 move on the NQ versus the ES. Depending on the type of trade that the setup, right? Every trade setup's a little different. If you're clipping at 40 points a minute, yeah, a 2-point stop's going to get burned through. But what if I told you that on this pullback, I could use a 5-point stop, which is exactly what I do. I'm getting to the point where I can use a 5-point stop on my NQ trades with about a 78% success rate. And if it burns through those 5 points, it's one of two things. Either the trade's just going against me and I'm out 5 points, or I probably chased it and did not have a proper trade entry. The second thing I'll say about the stops is if you're doing a price discovery, right? Maybe use 10 points. You're going below 18 points per minute, and you want to do a price discovery type entry to see if you can catch that 40-point bounce. Maybe I do 1 to 3 micros with a 10-point stop in this case. Once I get volume coming in or some other point of confluence, then I will add. But 1 to 3 micros for me at 5 to 10 points is not going to blow up my account.
Yeah.
So again, you've got to, this has to be put into context. I'm not doing 10 minis in a situation like this, right? I'm probably doing on a price discovery somewhere between 1 and 10 micros, depending on the situation for me. Then I will add 20 or 30 micros at a time. If it is like 3 or 4 points of confluence and I've got a Bill Williams fractal right on a liquidity zone, right on a market pulse, I might switch over to the mini at that point in time and put in, 1 to 3 minis and then add minis once I start realizing that the trade's going in my direction. And then I'll start legging out. I'm much quicker to get out of the trade on the minis than I am on the micros. Micros I will hold much longer. Just an example for today. I mean, just to compare minis versus micros. But as far as points go, and I don't usually share my P&L or points very often, I do occasionally so people don't think I'm just lying about whatever I'm saying on a chart that I'm drawing up. But today I had 1,671 micro points. Okay, that was in my bag. I had 167.75 mini points. So it's a lot less minis. And so I'll snipe a little bit quicker on the minis and I'll hold a little bit longer on the micros. I am not legging in and doing price discovery very often on minis, but I will do price discovery on the micros. So again, it's all kind of trade setups, how big your account is, what your comfort level is, and how well you know your repeatable setups.
Yeah. Exactly. And also, like, again, this is what you do, this is what you've put together for the way that you trade. I'm sorry, guys, to reiterate and underscore that again and again. I just think it's vitally important that, it's just like, oh, I'm just doing what Crash does. No, you got to take the idea. Now that's the starting point. Understand the concept. Now go back and look. Go back and look many, many times, at least 20 times. And then play around with it maybe in replay mode. That's the quickest way. Play it forward in replay mode, rewind it, play it again in replay mode. Can you see it? Does it work for you? Starting to put these things together, like Brandon talked about this on Monday with the Pro Trader webinar. He had to invent his trading The way he was trading wasn't working anymore. And he found something that worked for him, started to resonate by going back and looking at it. I know we throw around the term back testing all the time, but and you know why I'm bringing this up again is because there's so many ideas here that Crash has. So take one at a time, and or take something from it and see if it can work for you. Now Crash has been trading a while and he's got a lot of things here, but these are all excellent ideas and concepts. And maybe you don't have the bandwidth to be able to hold 10 or 7 to 10 ideas in your head. Maybe it's just 2 or 3, but that can be enough as well. It doesn't have to be too complex, but it just has to work for you. So I'll with that I'll I won't bring it
I
up
can
again.
I can chime in and say and kind of say something too. Is I didn't really understand Crash's ideas for a long time, but and I really didn't understand them. But over time, I've understand a couple. I've learned a couple things. One of them is learning risk management, and that's what he just highlighted. Which is in a highly volatile situation like that, you're going to be switching from. I found that it might be helpful to do what Crash is doing. Because if you're sticking to a single instrument and you're scaling and trying to do the same thing in minis, and you don't realize that larger time frame players are active, and you're getting chopped up, and you have your stop set to what it is usually set to when the volatility is obviously telling you that it's not going to work. Um, Learning risk management is huge. So if you can compartmentalize something that Crash was talking about, I think you could compartmentalize it by saying, well, learning risk management is a whole subset that you'd have to hone in on. The next subset is learning your price map. How are you? And that's different for everybody. You're looking at it from a higher time frame, from like a top-down perspective, or are you looking at it from a indicator perspective, or are you combining all of them? And so, yeah, I couldn't really compartmentalize what Crash was talking about when I first started listening to him, but yeah, those are two subsets right there: risk management, which is different from trade management, and but he was talking about he uses micros to use price discovery.
So
Then you'd be trade management at that point, right?
so no, okay, so the question would be back to you, DNT. um, what did you take from Crash and how did you learn it?
Just now, so
No, not just now, in the past.
in the past, well,
And sorry guys, we got to wrap it up here in a few minutes, but I just wanted to
yeah,
because like I said, there's so many different thoughts, ideas, concepts here, and they're excellent. And maybe uh, just take a few of them. So what were like some of the few that you took that you then started to make work for you, or how did you do it, DNT? Did we lose him? Might have lost him.
I think so.
Yeah. Stan, how about you? How about we'll move on to you? We haven't. I'm sorry. We kind of have.
Sure.
I've
yeah, I
been
got
on a
cut off there.
rant.
Yeah,
Yeah, I got cut off there. Sorry.
Okay. Stan, go ahead.
I no, uh, nothing to say. They're great lessons. You have your plan, you apply it. You know how to use Bookmap. No, just great job.
But Stan, maybe you can comment on that. Like taking things away from others. like what they're doing and then making it your own. Maybe if you can go through how you did that, or maybe some ideas.
About what I took from others.
Yeah, like and how did you integrate it into the way that you trade?
Um, I I really tried on my own actually, and really about the order flow. So when I came, I did like all the courses I follow, all the teachers from Bookmap, and what really resonated was really the order flow and looking at structure and about the behavior into it, and trying to really have like a good money management due to following the conviction. Um, but that's really, I try to keep it simple. I don't like to have a lot of things um, in my bookmark chart. Um, but yeah, that's pretty much what I do. And studying about liquidity
Yeah.
always. I think it's really something that resonates with me.
So
And
how did you? So you started to understand some of the concepts of liquidity, but then what did you do next?
I'm waiting for the conviction with this liquidity. Um, on, yeah, in confluence with potential, yeah, with levels.
Yeah.
And it will depend the market, obviously. If it is on bonds or on ES or Eurex from it will all depend the active, obviously. Um, they all have a different way of yeah, they move completely different, and they have some good liquidity play, good correlation. I'm trying a lot of things. I like to look at different markets and try to apply the order flow. But really what I use will be the relative volume, the aggressive conviction, as I always mention for the entry, sort of structure and liquidity to add in confluence with levels.
But so how did you? Okay, I understand, Stan, that I know that you look at these things from all the content that you've made. Um, how did you start to trust that? How did you start to make that into the way that you trade?
Building confidence after just repeating them daily after day. Uh, just just like that, keeping a track of your position, and it's working. So I just keep doing the same, and I repeat it.
Yeah. So then, Crash, back to you. Then, how did you also start to integrate? Like, maybe your process was sounds like Stan kind of did it daily by looking at real price action. Maybe not so much by back testing, but maybe a little bit. How about you? How did you start to integrate some of these things into the way that you trade?
Yeah, so for I'll be specific to Bookmap. So I traded for a long time without Bookmap, then finally figured out what Bookmap was a little over a year ago or so. Um, and at that point in time, honestly, it was just a lot of stick time, right? A lot of flying time, just day after day, or screen time, right? Stick time, screens, just an analogy to screen time. you have to observe tendencies. You have to observe market behavior. I can say this in regards to timing. If you start watching every day the first hour and a half, what happens at certain times of the first hour and a half of RTH, you'll start seeing the picture of where the market moves in that hour and a half. If you look at liquidity zones and order flow on Bookmap, start getting a feel for how price reacts to liquidity zones. Get a feel for what happens to the market when an iceberg pops out. You know what I mean? So a lot of this is just repetitive behavior, and it's not enough just to watch. You have to do it in sim, just like you said, right? You got to trade it 20, 30. How many times, like when they talk about sports, how many times do they say you have to do something? Anybody, you can answer in the chat. There is a certain number of times that they say in sports you have to repeat the maneuver for the maneuver to become reactive. Okay. And so you need to do that X number of hours, X number of trades, and preferably in sim, right? For that. Yeah, 30,000 at bats. I heard a wrestling move is 300 times. You have to practice one wrestling move 300 times. I was a wrestler. You have to have one move practice at least 300 times before it becomes instinctual. And the same thing, you got to take this trade in sim multiple time after multiple time to really be able to put the analyzation of the brain with the market behavior from the eyes to the brain to the hand pulling the trigger to hit the buy or sell button. So, you know, in flying, it's 500 hours. You have to have at least 500 hours of flying a jet before the hairs on the back of your neck stop standing up quite as strong, right? Where you start feeling a little more comfortable in doing that one type of maneuver. So the analogy is there. Get the screen time, start watching 2 or 3 things at a time, you know, limit it to 2 or 3 items that you're interested in observing. Price action with market pulse VPI, price action with liquidity zones, price action with iceberg surfers, something like that. Look at time, then start rolling in time frames at where those reaction times are occurring on a daily basis, every single day. I think I've told you before. You know, we do this process. You talk about doing this process needs to be beneficial to you. The reason you're writing it down, you're drawing on a chart, you're posting the chart is for you to learn to become a better trader. So you have to do that every single day on the couple of trade setups or whatever you're using to help you out. So again, coming to Bookmap, I like Bookmap. It has become one of my primary all-time best tools. And so I've watched hours and hours and hours and hours and hours and hours of Bookmap order flow in order to glean this stuff. And then what do? One simple thing. Take market pulse. Just do this. Take market pulse VPI spike, okay, with a liquidity zone and Fibonacci's. Somebody just try that for the next week. And you start watching where price bounces off of a liquidity zone with a market pulse VPI spike, and then you monitor the 50 and the 61.8 Fibonacci. Somebody do that this week and tell me after a week or two what you've noticed. I'm telling you right now, if you start watching these lows or these highs that occur in the first hour or so, and you get that impulse move off of a market pulse VPI spike, and you get a pull back after that impulse move, I'm telling you that impulse move is going to pull back to somewhere between the 50 and the 61.8 line if you're on the ES, and it's going to be between the 50 and the 65% line on the NQ because the NQ likes to overshoot. Just do that. This example right here is a perfect example. This ABC move up happens all the time between the AM high and the AM low, or vice versa, the AM low and the AM high. You're going to get an ABC pattern move off of a market pulse VPI spike. You're going to get the impulse move up. You're going to get the pull back into a Fibonacci, and then you're going to bounce again. And oh, guess what? That 50% or that 61.8 Fibonacci line is probably going to be at another liquidity zone on Bookmap. So just start taking 2 or 3 things, put it into practice, trade it, 30, 40 times on sim, then you'll start getting there.
Yeah. Yeah, really, really great. Really great discussion, guys. Thank you. Like, there's a little bit more I just wanted to add. Mr. Noluk mentioned something in here which I can it resonates with me. Is the this might be a little bit of psychology for sure, but it's risk management and not being able to accept the loss. If that's an issue, then find ways out of it. Like there's multiple ways. Like it's just another trade, for example, or is it your setup? Is it a really good setup? 8 out of 10, checklist setup, and does it hit your stop still? Okay, well, move on to the next trade, or whatever it is. Like, and then just get good at doing that. So what Crash, Stan, DNT, Shark, all these other, all you guys are talking about is in terms of your setup and what you're looking at. But this also applies to other elements within trading as well. Accepting a loss, fear of missing out, these types of things. Find solutions for them. If it's fear of missing out, well, miss a few, or maybe just take less. You only took 25% of your trade. You're in it. You didn't get much out of it, but you were patient. So maybe you're upset you didn't get a full position on. However, it didn't meet all of your criteria. So you shouldn't feel bad. Whatever it is, to find a way out of this, box, to find solutions for yourself. Crash just went through and outlined, ways to find a solution for a high probability setup that works for you, and Stan going through what he's looking for, etc. Guys, I don't want to have the last word in here. Someone come up with something brilliant, a last point or two, and let's wrap it up. We went over. We're not meeting next week. Is the Thanksgiving holiday here in the States on Thursday, so markets are closed later in the day. So I think it was sorry, Dan, but we went a little bit over, and thanks for sticking in here with us, Dan. I leave it up to Crash and Stan here.
Yeah, but thanks everyone. Have a great holidays, and thanks for posting.
Yeah, thanks for all the good discussion. I apologize if I went too long. Hopefully, it's beneficial for a couple nuggets out there. And thanks, Bruce, Dan, and Stan, for putting this on. Certainly appreciate you guys. Thank you.
Yeah, thanks everybody. Have a great Thanksgiving holiday, and we will catch up with you the week after. All right, take care, everybody. Thanks for a great discussion. Bye-bye.